We're at a very interesting and crucial juncture, and this is a first. One of the certainties of Bitcoin for 16 years was hash rates growing. Well, it didn't grow. We will continue to see probably negative growth, probably through the halving. Those companies are pivoting. It may save them because they were on a path that was unsustainable, but it's painful. We are in the depths of despair right now. When the next period of prosperity comes, there's going to be no systems. Bitmain, MicroBT, Canaan, I would be shutting that shit down big time. I had an opportunity to buy 10,000 S9s for 25 bucks a pop. A year later, I probably could have sold them for 150 to 200 each.
It almost sounds like if you want to go long Bitcoin mining and prosperity, like just buy a pallet of used ASICs and put them in the barn. The mining industry seems to have gone through a fascinating bit of a bear market shift. We've seen massive capital pivot into AI, and it seems that hash rate's actually been in a bit of a downtrend since October. So to kind of kick off the conversation, I'm genuinely curious, where do you see the mining industry sitting right now, and where do you think things are headed?
Yeah, well, I guess, nice to see you, Nathan. Thanks for having me on. Yeah, we're at a very interesting and crucial juncture, I think, in the mining world, and this is a first. You said we're down. Like, one of the certainties of Bitcoin for 16 years was hash rates growing. Well, it didn't grow. Like, we've spent now approaching a year, nine months or so, of hash rate decreases, and it's my prediction that we will continue to see at least flat, but probably negative growth, probably through the halving. So,
Oh, wow.
I think we're probably got, as much as 2 years.
Yeah.
Because, and there are several factors at play. The first factor is that a lot of the larger organizations that have been in mining, especially the publicly traded folks, have pivoted. A lot of them, interestingly, like they've kind of shed Bitcoin even in their, like, the way they position their company. Like,
Yeah, even their marketing, I don't hear them referring to Bitcoin anymore.
yeah, they, they'll call themselves infrastructure companies, or, data center providers, or, they've really radically kind of shifted. And and not only have they shifted the positioning of the company, but they have decommissioned equipment in a lot of cases. That decommissioning came because they had facilities that were attractive to, the AI and data center world, and some of them wanted basically like immediate attention. And so some of the decommissioning of those facilities was not because they had mining rigs that were at their natural end of life, but urgency to convert. And so, what we've seen is opportunities in some cases where equipment, like very current generation stuff, like S21 XP 270s that had been in service for 4 months or 6 months, suddenly came onto the used market.
Wow.
S21 Pro 234s, lots of those, which maybe were a year to 12 months old. So they were like, this is like, like really radical shifts, and so, it's been good. I mean, it's not, we've been able to buy some equipment at that, but what happens, I mean, that's a pretty radical, so that's part of why this is coming down. Now, at the same time, because Bitcoin's price has dropped even faster than the hash rate has dropped, hash price is really at an all-time low, or at least I would say a current low. I mean, you could say that the the miners in the first year or two had a pretty shitty hash price too. But in what we think of maybe as modern times, or as as Bitcoin in its mature era, these are unprecedented. So what it's done is it also accelerated the rate at which machines like, it's easier to use the Bitmain family, but like an S19J Pro 120 is for most people completely unprofitable. Like, there's no difference between that and an S9. Like, they're both, there's
Wow.
just nothing you can do with them. The market price of something like that is like $70, $80, if you want to buy one.
Wait, for the 19s?
For an S19J Pro 120, if you're trying to sell some quantity of them, you're gonna get like $70.
Wow, that's like right around what I paid for my S9 like a couple of years ago, and that thing's just sitting in my garage. I may still use it for fun, but
yeah, even an S19K Pro, which is the one after that, that's at 120 terahashes per second, 2,700 watt machine. $160-$170 is the, like, that's what those would go for now. And I have some operations where we produce our own power. We have very low costs, and we still buy some of that stuff because we can still be profitable mining with even that, that family of equipment, but most people can't. It's probably almost anything on grid. Those are untenable. So we have an interesting thing where those kind of units, the rate of obsolescence of the lower end units is increasing, but we also had some of the really recent generation stuff also get decommissioned on an accelerated basis. So I wrote an article for anybody that's interested several years ago. It's in Bitcoin Magazine. It's called The Miner's Trilemma. And one of the things I realized was that I was looking at new site development and saying, well, what are the factors? What has to come together if you want to put up a new commercial mining site? And it really boils down to three things. You need consistent low cost energy. You need efficient, reasonably priced mining rigs, and you need money. And so what I realized, though, was that at any one point in time, one of those three would always be hard. So that's the trilemma. The miner's trilemma is we have to battle through navigating that and solving for the hard one. Like if one of them's easy and it shifts, right? And so if you're a company that maybe that's good at raising capital, as an example, the public companies were always good at raising money. That was a strength. Well, if you were in a market where that was hard, but the other parts were easy, well, that put you in a great position because you had a lot of money at a time when others didn't, and the other stuff was there. On the other hand, if raising money is easy, there is a tendency for the infrastructure, the hash power itself, to get really expensive because if there's a lot of money, they quickly buy up the machines, and then there's scarcity of those machines. And then on the energy side, what's interesting about the energy side is it was really just the Bitcoin miners competing for energy. Well, we have a serious competitor now, and in fact, that one, I usually represent this as a kind of a triangle. Like, you could think of let's say we're in a period right now. The period would be capital very hard, energy very hard, and mining equipment very easy.
Yep.
Like that's the current parameters. So I would represent the mining equipment as green and the other two as red, just as an example. In the period just after the China mining ban, so let's say the second half of 2021, early 2022, the capital was green, energy was probably yellow. It was, there was still a lot of energy out there. You had to work for it, but you could get it. And it was impossible. This was, remember, people spending like $12,000 on an S19 100 terahash per
Yes.
second.
That's why when you made the comments about how cheap they are right now, that's the number that was still stuck in my mind. That's what like took me, like really drew me back and went, whoa, they've really fallen.
Yeah. So, so in those conditions, and you saw it, well, what happened? Well, the essentially what happened was, this is the Bob Burnett version of history. So as I say that, there's people that will object to what I'm about to say, but I would say there was very, very poor fiscal discipline in the public pubcos. They had all this money and they spent it. They way overspent. Like that's why we had these $12,000 systems, and they continued to overspend for a couple years. So a lot of the meteoric rise in hash rate that we saw 2022, 2023, 2024 was because capital was too easy and it caused overspending and overbuilding. And that had the very negative effect of meaning that small to medium-sized companies, which typically don't have access to capital, but maybe had operational excellence. They maybe knew how to run a low-cost operation. Maybe they even had access to some low-cost power, but in smaller pockets. They were forced out of business, or the business never started. So the way I look at it is, some people might look at it as Darwinian, but it really wasn't the survival of the fittest. It was the survival of the biggest. It's kind of like, when I guess try to put it in those animal kingdom perspectives. I'm making this up as I go. It's almost like, when a new like predator comes into a region, like an invasive species comes into a region, and it completely screws up the balance of the ecosystem.
Yep.
And the apex predator, the big bad one, the python, like I live in South Florida, the Burmese pythons are in the Everglades and they're eating all the rabbits and the all these other animals, and they're making it hard for even panthers and bears, other apex predators, to live. Like they just like, and so I think something like that kind of happened. And
I was gonna say, it kind of reminds me of the Ray Dalio's debt cycle, where like you would have had the normal, almost like linear trend, but we way overbuilt, and then as a result, we're gonna way overcorrect down because it's been such a misallocation of capital, essentially.
I think that is true. And what's been beneficial, though, is the AI thing. One gave these companies, because if you look at the performance of the public companies, it's shitty.
Yeah,
like they have not operated efficiently. Many of you have probably seen like the projected cost of producing a Bitcoin, and you'll see, I'm not going to call it any one specific company, but you see a lot of them, $103,000, $108,000, $98,000 for cost of producing one Bitcoin, which, as we're sitting here today, I think Bitcoin's at 62.
Yep.
After a recovery from 58. Like, so if you're producing at those levels, but you have in your treasury, you have 60,000 Bitcoin. You can do it. Like
Yep.
you're like a big fat person who has a caloric deficit every day. You can lose weight for quite a while before you die, but if you're an average person who suddenly is on a caloric deficit, you don't have a lot of
Not got a lot of
leeway.
runway there.
There's not a lot of runway. So I think that's kind of what happened. And so I don't wish ill on anybody. Those companies are pivoting. It may save them because they were on a path that was unsustainable, but it was going to take a while. Well, now they've gotten a refresh of capital. Maybe under these business conditions, they can survive. Good for them if they can, doing whatever they are. But from a Bitcoin perspective, getting them out of the ecosystem, getting this apex predator who was disrupting the ecosystem out is, I think, very positive. But it's painful right now. And hopefully it will bring about, the small and medium size vendors. So, because not to be all over the place, but this concentration of hash rate also, which is bad, right? That's just kind of a centralization force. I think too much concentration of hash rate. It also tended to lead to a concentration of pools because the big guys tended to use the same pools. So there was a direct correlation between this activity and hash rate centralization, and then pool centralization, and then block template centralization. Like all these sort of things kind of played off of this really symptoms of the same disease.
Peptides have exploded over the last year. Search interest just hit an all-time high, and people are searching peptides more than AI right now. One company I actually trust in the space is Real Peptides, and here's what I've been running. BTC 157 was the biggest standout for recovery. Tessa and Ipamorelin helped me put on the most size I've ever had. Trinity X, a GLP-3, was incredibly potent for appetite control, and DSIP has become my go-to for sleep when I need a reset. Sourcing matters a lot, and Real Peptides is research use only, third-party tested, and even endotoxin tested, which few do. So hit realpeptides.co or scan the QR code on the screen and use code BTC Sessions for 40% off your first purchase. One company I like pointing people to when they ask about Bitcoin mining is Abundant Mines. They were founded by Bo and Christine Turner after losing over $500,000 to broken promises in the mining industry. And they built their hosting model to remove the usual headaches. With Abundant Mines, you own your machines and keep 100% of the Bitcoin you mine. There's no revenue share, no hidden skims. Pricing is simple. One flat monthly fee covers power, parts, labor, and repairs. They also guarantee uptime. If a machine goes down, their hash rate redirect system routes hash power from their fleet so earnings don't just stop, and every machine is insured at full replacement value. Everything is hosted in the US, powered by Hydro, and mining equipment may qualify for 100% year one bonus depreciation. Learn more at abundantmines.com/sessions.
You mentioned that you think that hash rate is going to continue going down into the halving, which I think is 1 year and 9 months away, something like that. Why such a long, drawn-out timeline and continued declining in hash rate? And then additionally, just to throw in there, is there any point in time where you'd be concerned about the security of the network from a hash perspective? For me, I was trying to think about this the other day, and if I remember correctly, I think if I go back to like 2020 or 2019, we're only at like 100 exahash or whatever it was. And so that would be like a tenth of what the network is roughly right now. And I didn't think it was unsecure at that point in time. So even just as a loose heuristic, I was like, look, if I lost 90% of hash, I still don't think we'd necessarily be unsecure.
Yeah. Yeah, I don't have concerns about the security because as you said, if we fall by half or 2/3 or something like that, it's still massive.
Yeah.
And although I would say the risk does start increasing. it's really edge case stuff where the concern of a large bad actor trying to assemble enough hash power to attack the network. That's what we always have to worry about. Okay. So in the current conditions, there's no way that bad actor could get the power or the compute, the hash, to do so. So because even, for instance, like if we're 20% off of the peak right now, it's roughly in that range. You could say, well, if the bad actor acquires that 20%, like somehow they take all the hash that went offline and they acquire it and they're able to energize it and they direct it in a negative way at the network. Could they do anything? No, like it doesn't. Now, if the network falls by half, and so now theoretically they could, right? So in fact, even if it falls by like 40%, because there's a misperception that a 51% attack takes 51%. It actually doesn't. It only takes like a third.
Yeah.
But realistically, no.
Not likely.
I mean, because even the hash rate being there, like where's the power come from? Where does a couple gigawatts of power come from directed at this?
He would direct it all at a loss too. It's like as soon as you start buying up, as soon as they start to come in and buy up those ASICs, they'd also be raising the price of the ASICs on the secondhand market, and it'd be running away from them as well.
Yeah. Okay, so why will hash rate come down for a long period of time? I think I've avoided that question more than once already, so I'll hit it. So, okay. I mean, we are in the depths of despair right now.
Oh yeah, every sentiment. So by the way, even just on like the YouTube side, because I watch the videos and what people are searching for and all this stuff too. Yeah. Every possible thing that I could look at to try and gauge sentiment says it's absolutely shit, that everyone is miserable or they just don't care.
Yeah. So, the truth of the matter is raising capital is hard. It's not impossible, but it's hard. And we're just about to actually enter. We're planning to expand. So we're gonna open up a new investment opportunity here probably in the next 30 days. Similar site to the one I just talked about in Pennsylvania, natural gas site. But there's a select group of people who, one, have the money. Money's tight because, when you're raising money and when Bitcoin at 110,000, I mean, our most likely investors are Bitcoiners, right? So if Bitcoin's at 110,000, they feel a lot better about either cashing in some Bitcoin or taking a loan against the Bitcoin to feed the investment. The banks and the lending institutions, which traditionally hate us anyway, we've never really been able to secure them. They really hate us now. Like, so capital is there. I don't see any of the pubcos jumping in. Like I see nothing. I want to come back to who I do think will come in on the backside of the.
Okay.
So remind me to do that if I don't hit it naturally. The halving is scary.
Yeah.
So when you're putting a business plan in place and you look at it, you go, well, okay, I'm going to, if I start today, let's say a site takes 4 months to bring up, like a small site, let's say 4 months, just pretty quick, actually.
It's not bad.
Well, now you have maybe a 15-month run, something on that order, 16-month run, pre-halving. You got to deal with the subsidy getting cut in half. We have a fee market
and fees are so low.
Zero.
Yeah.
So, you can't, while historically fees look like they rise just in front of the halving, but a lot of that was like the last one, which was especially high, was driven by a lot of the ordinal inscription
Yeah, a lot of the crap that was
shit.
going on at that point in time.
and,
I remember
yeah.
on the day of the halving that like fees just went through the roof.
Oh yeah, well there was the block 840,000, which was the halving
Yep.
block. I think it was like 38 Bitcoin was the fee.
Whoa.
Yeah. So, like I said, the ordinals inscription guys, which those of you who don't know me, I'm not a fan of that stuff, but
Yep,
it's
all crap.
It did show what happens when. So what I'm grateful for is I think it was a economic experiment or social experiment on the scarcity of block space.
Yep.
And so, we got to see in real time with real data what happens when there's competition to get in a block before a certain date or a certain time, like how valuable that can be. So that gives us hope for the long run, but it's not in the short run. So I don't see any major investment in mining until we get to the backside of the halving, and we see some indication of either much higher Bitcoin price, sustained higher Bitcoin price, and or a sustained spike in the fee market. And I just don't see any money coming in. What I do see is a lot of machine obsolescence coming up. So, next on like we're seeing the S19K Pros start to flip out of circulation, and then we'll have the S19 XP class. We'll follow that. And so there's a lot of hash rate represented by those machine classes currently in operation, and I just don't see it being refilled. One of the traditional things that would happen, by the way, is that let's say if you had an S19K Pro, okay, now it breaks or its economics no longer are viable. Well, traditionally, what would happen in a commercial situation is somebody's going to go buy a better machine. It would probably be something like an S19 XP270. So what you would see is with roughly the same power profile in that spot, you would see a doubling of the hash rate.
Yep.
So while, hash rate was doing this, it was going up. So the first part of it was actually new energy coming in and new machines. And the second part of the spike was a lot less new energy, but a lot more replacement. It's basically Moore's law driving us up. Okay, so that's but we're not. I think we're instead seeing the opposite. We're either seeing facilities shut down or facilities converted to AI or data center applications.
Are we still seeing the same kind of growth in machine and ASIC efficiency, or is that starting to kind of taper off a bit as well?
Well, it appears to be slowing, and I think it will continue to slow. And this hasn't been talked about a lot. It's a really good question. I'm purely speculating. I have no inside knowledge, but I lived in the chip world from my personal computer days a lot. Spent a lot of time with these kind of companies. Bitmain, MicroBT, Canaan, these sort of companies, like they have relationships with these with TSMC or Samsung that build the chips. If I were them, I would be extremely reticent to be placed, and you have to place orders like a year ahead. You have to put deposits down. You have to reserve the wafer size. Like I would be shutting that shit down big time. Not to
Really?
zero.
Yeah.
I would, because or I would be selling my wafer starts to Nvidia or Qualcomm or these other companies, but I would be doing everything I could, because once they get the chip built, they got to turn it into a system.
Yep.
And that takes a lot of capital on their side. And I don't think even when they sell new units today, they're really making any money. We also have, by the way, even though there's not a lot of it in our systems, there's still like DRAM and things like that go into a Bitcoin mining system.
Yep.
And those prices are just ungodly, right? And so the market can't bear it, though. Like we can't bear. It's why I think the used market's flush, because like those are sunk costs. But the new systems, I think they're having trouble getting anybody interested in new systems. Prices just aren't cheap enough. So anyway, that's my long-winded way of saying I believe we're going to see way less wafer starts directed at Bitcoin mining, and then that will. So what could happen then, if we go back to the trilemma, is when the next period of prosperity comes, there's going to be no systems. Like used systems will get like super expensive, because like they won't be producing the new ones, and then they'll restart the engine, but it's many months, if not a year, to restart the engine. At the same time, they're gonna most likely slow down R&D and pushing these efficiency gains, which get harder anyway. So yeah. So I see a lot of that kind of just really dragging.
Not financial advice. It almost sounds like if you wanted to go like long Bitcoin mining and prosperity, like just buy a pallet of used ASICs and put them in the barn. Just wait to sell them when everything takes off.
You could try it.
Yeah.
I'll never forget that it would have been like late 2020, I had an opportunity to buy 10,000 S9s for $25 a pop.
Yeah.
And I passed, right? And that would have been what would that be? That'd be $250,000. So like, well, am I gonna, I don't know. But a year later, I probably could have sold them for 150 to 200 each.
Yeah.
In the midst of the China mining ban. So we all have our woulda, coulda, shoulda stories. So that could happen. And in hindsight, it wouldn't have been that stupid, because other than that was 10,000, maybe I could have bought 1,000 something.
Yeah.
But because had the China mining ban not happened, they still would have probably been worth $20 or something. Like they wouldn't have. They had a scrap. They was like barely over scrap. I could have probably scrapped. Let's say I put 25 instead of 250,000. I put 25 grand in, and then, had a chance to 10x my money, but my downside was maybe getting 60 cents on the dollar in scrap.
Yeah.
Like I don't know. I didn't see the 10x possibility though. That was
I don't think we saw that one
part
coming.
of the equation. So
You, yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.